You know that sound. Today's closing bell at the New York Stock Exchange.
There we go. Some clapping, some joyful smiles. Let's see where the numbers land as they settle. You see there that it was mostly an update for the Dow Jones, but it ended relatively flat, down almost 40 points. The S&P 500 and NASDAQ also ended the day relatively flat. So tipsy-turvy moment on Wall Street.
Yeah, well, let's learn more with Lori Bettinger. She is the president of BancAlliance, and she was also the director of the Troubled Asset Relief Program, better known as TARP, in the Obama administration. She's also a friend of the show that we're always glad to speak with. So, Lori, tell us what was driving the market today.
Well, I think that we saw another big data release and another day of everyone trying to guess what this means for the Federal Reserve and interest rates going forward. We had the CPI come out, which tells us what's happening with inflation. And as we saw, inflation, it continues to exist, but it's not growing as much. It was sort of, at this 5% rate, which was it means that prices are still increasing, but they're increasing at a slower rate before. So this was good news for the market. But when you dug into it, prices in all sectors aren't decreasing. So I think there's still some concern about what that means about inflation. And do interest rates have to continue to go up to continue to try and keep inflation under control?
That's right. I know tomorrow the producer prices report is expected to be released, so perhaps some investors waiting to hear more based on the new CPI numbers out today. But investors are obviously responding to this fresh data. How does the entire picture then, Lori, impact the Fed's decision around future interest rate hikes? I've heard the most optimistic among us suggest maybe they won't be as high as expected. Maybe we won't see one. How do you see it?
It's a great question. I think that's what we saw in the market today, right? You sort of saw some positive movement, then some pullback, as I think everyone was digesting and asking that exact question. I wish I had the answer, but I think it's certainly possible that we're going to see another interest rate increase, maybe of 25 basis points. But on the other hand, we're starting to hear, some more people from the Federal Reserve say, hey, maybe it's time to pause and let these increases work through the economy. It seems like inflation is moving in the right direction, at least. Maybe, there's enough going on and the economy is slowing gradually and we don't have to keep raising interest rates, which always brings these unintended risks like we saw, with the banking issues, just a few weeks ago. So there's so much to tease out right now. And it feels like, there just keep being more factors that add into this question that all these investors are thinking about.
Yeah. Well, let's dive deep into one aspect of that, which is the price of food.
Right.
Grocery prices, for the first time, were increasing at a slower rate than restaurant prices. That's the first time since 2021 that that's happened. What does that tell you about core inflation and the restaurant industry, particularly as it continues to try to recover from the pandemic?
Right. And I know that food, whether at home, in the grocery store or restaurant, has been something that I think so many of us have, where we've just seen the price increases in all of our lives and homes, over the past month. You go grocery shopping, you're like, what happened here? But I think it makes a lot of sense when you stop and think about that, because what do restaurants have that, we don't have to pay for when we buy food and cook at home? Labor. And we continue to hear about rising costs in the labor market. And I think, we've seen a lot of job growth in that food and hospitality sector. And so it makes sense, right? It's still at restaurants, they're not only feeling the pinch of more expensive food, but also, it's harder for them to hire and they have to pay higher wages. So, you understand how this could happen. And I think we're going to continue to see restaurants, do well. But I don't think that a 1 month of change necessarily affects people's decision as much about eating at home versus a restaurant, which is typically always a bit more expensive. But that is something to keep our eye on. If these two things start to diverge, does that, again, really put restaurants under pressure after, as you pointed out, they've really spent a lot of time recovering from the effects of COVID and the shutdowns?
Yeah, certainly a lot to dissect in that front. But just saying, here in New York City, with the weather being so nice, I've seen a lot of those restaurant seats filled, especially for the outdoor cafes. Lori Bettinger, thank you.
Absolutely.
Yes.
Thank you.